So the question is, how do you raise private money to fund your real estate deals? I'm here with Adam Adams. He's a pro real estate investor. He's been doing this for a long time. So Adam, how do we raise private money to fund our real estate deals?
It's funny. I'll say everybody here, everybody who listens to this probably has heard somebody tell them, if you find a good deal, the money automatically comes. And I can name too many examples with myself and with other people that have lost deals and lost a crazy amount of money, that it just doesn't automatically happen. Just because there's a good deal doesn't mean people are ready to invest. And sometimes if it's that good of a deal, they're scared to invest. So I do it a little bit differently. And instead of just saying, okay, I've got a deal, now I'm going to raise the money, I put finding the deal as the last of 5 steps.
Okay.
Raising the money is the 4th. So I'll go in order for the listener. That way they can take notes and be like, this is how I'm actually going to raise money.
Sure.
And for the record, I've raised millions and millions of dollars.
Oh, okay.
I've raised money for fix and flips and assisted living and self-storage and a lot of apartment buildings. We've done deals that the apartment building's $20 million, and so you've got to raise $8 million, and you got to do that within a few weeks. So this is something that's not new to me, but I've learned the hard way that you got to go kind of in a new order. So step 1, for those of you who are writing this down, step 1 is I need to first get educated. I need to know what the heck I'm doing. So if you go out and start doing real estate, you could lose money. And especially if you're raising money from other people, that's terrible because then you're losing their money.
Yes.
I know you have an education, right? You guys do that. Okay.
Yeah.
You got to start there. No matter what, you got to learn what you're doing, learn how to look at a deal, how to find a deal, etc.
And to cut you off just real quick, the education piece of this is not just how to do the deals. It's also what to avoid with big, scary organizations like the SEC. You can do some things. The SEC does not like it when you lose investors' money. And so starting with the education to figure out what you can say, what you can't say, how you can advertise, how you can't advertise, what type of documentation you need to protect the investor, the consumer, whoever, big deal. So I completely agree with you. Education, step number 1.
Step 2 is now it's time to select the market that you're in. One of the big things that a lot of people do is when they're going to find a market or find a deal, they go to wherever the deals are cheap. They go to whatever. I don't agree with that 100% at all. I want you to find a market that you believe in, that's stable, that to visualize it, it has a tailwind instead of a headwind, something where the jobs are coming up, etc. So step 2 is to select your market. Step 3 is where you start building a team. This is where, for example, I did a lot of syndication. That would be raising money for large apartments. So when you're doing that and you're building your team, one of the most important first things to do is to find a property management company way before you go and talk to brokers about a deal, because they're always going to ask you, who's going to manage this? Where's the money going to come from? They're going to ask you these questions. And if you don't have the answers when you talk to the broker, they're never going to send you an actual deal.
I have some questions on that because I've done commercial, I've done apartment, not really apartments, I've done quads and that kind of stuff. I had a hotel, I've had office buildings. I would have thought like actually finding these deals, because there's, I'm a residential guy. There's tons of houses. Like there's what, 1,000 times the amount of houses than you have apartment buildings, right? I would have thought that having that person who's going to help you find that deal is more important.
It makes sense. I hear you, especially when you're doing large apartments.
Yeah.
If you don't have the whole team in place before you look for the deal, you're just going to get laughed out the room. No, you're not going to get a deal if the team's not in place. So let's go to syndication of large apartments. There are different strategies to do. So one of the strategies, if you're doing all of that, is you're going to find something that is a C-class building, and just think A through F. Okay, it's a C-class building, and it's in a B type of neighborhood. So it's a decent neighborhood.
Okay,
this building needs a little bit of renovation. So on average, I've got 100 units. I want to put in $6,000 per unit. It's a very small little thing, a little bit of flooring, a little bit of paint.
$6,000 per unit. Okay. Sounds good.
Very small.
Yep.
Now you could do 20, 30, 40, even $100,000 per unit, but let's just take this for example. I've got 100 units. I'm going to do $6,000 per unit. That's $600,000 that I've got to put into this building to make it be able to rent at a higher level. I want to find the property management company that has done that before. So if you don't already have your attorney, if you don't already have your property management, if you don't already have everybody on your team, and you go and talk to that broker, the broker will not give you a deal.
That's interesting.
Commercial brokers are some of the richest, wealthiest people on this planet because they might make $1 million or more just by doing one transaction. So if they do 3 that year, they're making really, really good money. They become the best salespeople that you or I probably know of.
Well, that's interesting because in the residential world, brokers, wholesalers, whoever, like it's just about, hey, can you get it to the closing table?
Yeah.
The vetting process seems much more intense in the commercial world. And when I sold my hotel, it was the same thing. Like we went through all these looky-loos, and eventually, my broker was worth every penny that they make because of this situation. So that's how you help find the deal. And step 4 is that's when you're starting to actually raise the
Now
capital.
We're raising money.
Okay. All right.
But you're like, how do I raise money? Because I don't even have a deal yet. What am I going to raise money for? And no matter what, it doesn't matter what your strategy is. Let's call it fix and flips. If you are starting to raise money, it's all you got to do is you got to start having conversations with people, and you got to let them know what type of deal that you will do, that you're looking for. Hey, I'm only looking for fix and flips that are, I want to be able to buy them for somewhere in the range of $200,000 to $300,000. I want to put in $60,000 to $100,000. And the plan is to sell them for $500,000 to $800,000. This is my strategy. So now you can create a webinar, for example. Yeah. You can say, hey, I'm doing fix and flips. I want to show you the strategy in case you want to be invested in something like this alongside of me. So you host these webinars, or you go have lunch with them, buy them dinner if you can afford it.
Yeah.
Sometimes we can't. You go and buy them dinner if you can afford it. Yeah. And you sit down with them and you just show them the strategy. This is the type of deal I'm looking for. They don't come all the time.
The misnomer that a lot of new people, to cut you off real quick, is, newer investors who are trying to raise capital think that you've got to have this deal ready to go before the capital is going to come. And that's just not the truth. People who have capital, who want to invest in real estate, they understand that it's a prudent plan to get your ducks in a row before you actually have a thing to invest in, right?
And the investor, that private money lender, probably wants to start to have a conversation or two with you. They probably want to start seeing what it is that you'll do before they give the money. Yeah.
Have you ever done any market tours with these investors?
I've not specifically done that, but I'll tell you what I did do. I hosted a meetup group for several years before COVID, and I would take people on a tour of like 100-unit complex.
Yeah.
So I was doing deals outside of Colorado. I live in Colorado, but my meetup was in Colorado, and I had a couple of friends who own apartment buildings here in Colorado.
Yeah.
So I would go and ask, hey, can we do a property tour? I want a lot of people to come to your tour. I can show you off. You can teach them what not to do to make sure that they can be successful. So that's what's going on. But what I do is all of the people that came to that tour are interested in being invested in apartment buildings.
Yeah.
Some of them want to be operators, the GP, general partnership.
Yeah.
Others want to be LP. They want to just put capital and do nothing.
Yeah.
So then at the end, I can just reach out to people or talk to them at the next event. I can call them, I can do whatever and say, hey, you came to that property tour. What are your goals with apartment buildings? Is that something you want to get into, or you were just curious? Oh, that's something I want to get into. Oh, that's awesome. What's your plan? Do you want to raise capital to do these? Do you want to operate these? Or do you want to passively invest and just make money?
And that's a good question. So how typically are you structuring the whole offering? Is it because of the way you're doing it? You're getting some debt because you're dealing with large number, $100 million projects. Is that fair to say? Or
one project is going to be between $5 million and 40 million.
40 million. So you got a $40 million project, and that's the whole kit and caboodle, right?
Yeah.
So you're looking to raise how much private versus using bank loan?
It depends on the economy and interest rates.
Or would you try to
today? You would probably be able to get a loan for around 70, maybe 70%.
Yeah.
The reason why is because commercial they rate how much that's worth and how much they can give you based on the debt service coverage ratio.
Okay.
That means like how much of your monthly payment that goes to me, your lender, is net profit from your cap rate. So how much of that is your net profit? Okay, I'm going to let you have a 12 or a 6 or a 3 or a DSCR, debt service coverage ratio. So I want you to make triple what you're paying me, for example, whatever that lender is.
So is that so to break down numbers really easily, is that, hey, if on a monthly basis we're netting $30,000 to make math easy. If we're netting $30,000, your loan payment needs to be $10,000. Is that the way to think about it? Or?
Most banks, most traditional type lending is you want at least to make 1.2% of what you give them.
Right.
If your payment is $10,000 a month, you must at minimum make $12,000 a month. Net $12,000 a month.
On top of your
after all of the other expenses,
including so that's maintenance. That's everybody, so and that's also including the debt service.
So there's something,
or do they care?
There's something called a cap rate.
And Adam, part of the reason why I'm asking a lot of these questions,
I'll explain it
about lending. I've used loans back in in the day when I was the hotel and the office buildings and that kind of stuff. But I haven't used a bank loan since 2016. So all of what I do is just private equity, like private stuff. So it's interesting to go back into the lending world.
Do some of these deals with 100% private. It's just easier to get a bank loan. So the debt service coverage ratio.
See, I look at that and I go, it does not seem easier, but anyway.
There's pros and cons to it. The banks are dying to lend money, and they lend money in the tens of millions at a time. And they're happy when they can do that. And the interest rate is way lower.
Okay.
So for the most part, when I work with a private lender, they're probably going to make 10% or more.
Mm-hmm. Yeah.
So we might have some that with what's called an IRR, they might end up getting 30% average return. Anyway, you don't have to pay the bank that much. The bank might only ask for 3, 5, 6, 7%. So anyway, you secure a loan.
Yep.
Let's call it 75% of the amount. And then you need the down payment, which is 25%.
Uh-huh.
And then you need money in the bank.
Mm-hmm.
We'll call that a few more percentages.
Yep.
Yeah.
Yep.
And finally, you need all of the money that you need in order to make the deal happen. So if we went back and we talked about the $6,000 per unit, that's $600,000 for 100 units. I need at least that $600,000 plus I need the reserve, plus I need X, plus I need Y.
Yeah.
Yeah. So then you raise the 25% and
25% plus
75%. Yeah. So you probably will raise, if your down payment is 25%, you'll raise like 40%. If your down payment was 15%, and that's possible, not as much in the market that we're recording in, because interest rates are higher.
Yeah.
And so debt service coverage ratio is going to be a lot more challenging because your payment to the bank is way higher with just one more percentage point if you're talking about millions of dollars.
So the actual raise from the private people, because that's the question, is how to raise that money from them. Tell me if I'm tracking with you.
Okay.
You're going to go and say, hey, here's the type of model that we're looking for. Here's the type of deal that we're looking for. Here's what we're going for. Here's the market. Here's the team. Here's all the prep work done. Once we find this deal, we need X dollars. We need, in the case of a 40 million.
You're at a really good spot.
Am I? Okay.
And I think that this number works really well regardless of what type of real estate you're raising for.
Okay.
So if you're doing fix and flips, this number works. If you're doing syndication, this number works. The way that it looks is I want to have in commitments, I call them pre-commitments, triple whatever I think I need.
Okay. So if you need $10,000, you want to have 30.
I want $30,000 of people saying, hey, I will definitely invest with you And if it feels like I can easily do 30 based on people's conversations, then 10's going to be easy.
Then 10's going to be there. Got it.
30's not going to be easy, by the way. If it feels like 30 is easy, it's not.
Yeah.
It's a third of that what's very, very easy. You've got to get the pre-commitment. So going back, step 1, we get educated. Step 2, we find the market. Step 3, we start building the team. 4, we start having those conversations, letting people know our business model, what we're looking for, and we raise the money. We get pre-commitments. We give them a sample deal.
They're not signing anything.
No.
They're just saying, you get a deal.
Actually, they might sign something.
Oh, really? Okay.
Yeah, in some cases, we've had people sign things.
Okay.
So what that is I say it like this. These deals go super fast.
Yes.
So I need to know just if you're committed or not. If you are, just fill this out. And it's like a spreadsheet with people saying how much that they will do. It's all the same. All it is they put their name, they put the amount that they want to invest, call it $100,000. Then they put, yes, I can do it fast enough. And then they just sign it at the end. Okay. And then you say, if I've got this filled out, I'll call you first. If not, you might miss out on the deal.
So it's very rudimentary. It's not a big, it's not a binding thing. It's not illegal. It's just
not at all.
It's just something. It's more of a sales psychological. I'm in type
I want
situation.
Them to say that I said in my head.
That's a good idea.
That I could get this money to you within 2 weeks, no matter what.
That's a good idea.
When I say I've got a deal that meets this, they don't come all the time.
Okay.
So when I say, hey, I finally got a deal, it meets all of the qualifications that you and I talked about, I want you to be able to say, yes, I can have the money all in that bank within 2 weeks.
Thanks for watching. Hit the subscribe button right now. You don't want to miss the next episode. Every week, we drop practical money strategies and real stories that'll change the way you think about wealth.